Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You're listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1590 WPSL. We're still covering the major smackdown in the precious metals market on Friday. Everybody's got their opinion what's going on, but we do agree on one thing, and that's that in the end result, nothing's changed. The fundamental case for gold and silver is stronger than ever. And with me now is David Morgan, the Silver Guru. Hello, David.
Good weekend to you, Kerry.
Yeah, I don't usually do these on the weekend, but I felt that this was important enough. And, of course, David's publication is silver-investor.com and the Morgan Report. So did you see this coming, David, or did you have a feeling it was going to happen?
Yeah, I did. Silver has a very typical spike kind of a modality. Something I wrote about for Futures Magazine years ago, and I think the article is called Spiked Again. It has spike highs and spike lows. Spike high is like a parabolic move up, and the spike low is like an extremely big move down for a very short duration. So when you're looking at a chart, you'll see like this trend, and all of a sudden you'll see this trend at an extreme. In other words, you'll see like a line. It'll be like a one-day event where you'll see a huge price movement either up or down. And I call those spike highs and spike lows. And what we saw in silver last week, I think it was something that looked close to a spike low, but I pointed out to my Basic Plus members. So these are members that are looking at not only the basic Morgan Report, but they get the next level up. And that's where I let them look over my shoulder. I do a video presentation, and I show them usually chart-wise and other things you can look at visually as I'm also speaking about them, and what I saw and what I didn't see. And I thought, it looks like a spike low, but I'm not really sure. So did I see it coming? Sort of. I did think that it didn't fulfill what I would think would all the criteria that I look for a spike low. And here we have this spike down, and I'm certainly not convinced this is it. In fact, I'm almost certain that it is not. And the reason being, Kerry, as you know, that with the movement of $1.81 down on silver, $84 down on gold, and these being in the paper markets, there's going to be some extremely interesting margin calls starting on Monday with the phones ringing. And I've never seen a time when you had this kind of movement down in a commodity, be it the metals markets or the ags or the softs or whatever, where you're not going to see the price continue on that trend because a lot of these people cannot meet their margin calls, which adds to the selling pressure. Mm-hmm. So I think we're in for a very interesting week ahead. As I said, I just spent probably a good 2 hours making a 37-minute video regarding what I see for the metals. I showed, the uptrend lines for gold and silver, how you draw them, why you draw them the way you do, why you don't use a log scale, and on and on. Then we went through, what has happened in the past, what kind of washouts we get, what to expect, and a lot of stuff. I mean, and I can talk, as anyone else knows. But nonetheless, I did, hit the pause button probably 20 or 30 times during this because, I try to be succinct. I make a point, I show it, and I show it usually 2 or 3 times. I want to say, well, this is it, because if you do that, and I've taught long enough that, if you say something once, sometimes it goes over somebody's head. But if you say it 2 or 3 times in a different way, then usually, oh, I get it. Oh, I see what he's doing, or that type of thing. So, I've been in the, teaching mode for a very long time. So usually when I'm trying to make a point, I do try to maybe belabor it slightly, but so that I don't get a lot of, extra work calling me up or sending me emails. You said blah, blah, blah. I don't get it. Can you do that again? So I take a little extra time, you might say. Anyway, enough about me. These markets have been hit hard. Expect more damage. I don't think the damage is complete.
Yeah, probably right. And one thing that somebody pointed out was a massive put position. Like gold had gone under 1,500, then it climbed back up, and it was holding there. And then right at the end of the day, right before the close of the market, a massive put position, numerous positions in GLD, which just had the effect of knocking down GLD and then knocking down the price of gold. So we're definitely seeing the bankster force take advantage of what probably might have been a natural kind of weakness in the precious metals and use that to drive it down even further.
Yeah, well, a lot of this goes, the momentum players and then certain levels are broken and, are these guys broadcasting to each other and that type of thing? Who knows? I mean, I think, there's probably some of that. That goes on here, probably in almost any market you want to name. But yeah, just to back you up, Kerry, we've gotten, if you look at the Friday action in gold, New York time, basically it held, like you said, right at the $1,500 level from 11 a.m. New York time to a little past 1,500 New York time. And all of a sudden, bang, you get moved down to 1490, bang, you get moved down to 1480 and sell off at the low at 1477. So, these guys can move a lot of money with a mouse click, especially in the paper markets. You can't really move that much physical around, that quickly. But, options expiration is next week. The main thing is just, to take a deep breath and know what's going to happen. I mean, basically, there's going to be a lot of margin calls that will be made.
Yeah.
A lot of big players and small players. I mean, even the big players get over leveraged. And that's what you saw in the financial crisis of 2008, among many things. But that was one of the things that you saw. People go, well, why did gold go down during that? Well, the reason it went down is most of the gold that's owned by big money is paper gold. And so when they have to make a margin call, they sell whatever they can. Gold went down less than a lot of things went down, but it still went down. And, of course, selling gold that's paper gold is very easy to do.
Yeah.
And so it went down. So silver went down quite a bit, and percentage-wise more than gold did. And all this stuff was basically paper trades. Mm-hmm. Nonetheless, it was a sale, and the price was driven down. And so I guess I'm belaboring the point. But what I want to make sure everyone understands is what you said at the beginning. If you talk to any of, I guess, the stalwarts in the industry, you took it, the Jim Sinclair, and you go back to the Harry Schultz that he quoted in his letter today. Speaking of what Jim Sinclair wrote on the internet today, I mean, Schultz goes back forever, very wise and well-seasoned investor and a very good thinker. And anyone else, I mean, you've got the Aiden sisters, Doug Casey's group, many, many people that are well-respected. Fundamentally, things have never been better for gold. I mean, what are you going to do? Trust the banks? I mean, the situation is tenuous at best, and that's putting it politely. So the fundamental fact is that gold is the currency of last resort. Silver, as much so in my view, and I hold a minority view there, and I realize that, but I'll say that because in a real crisis situation, like an Argentina situation, I sent out a update a long time ago to my paid members, and I also gave it to all of my non-paid members, the people that just have the free email list, which I'm happy to do, which comes out of my pocket, by the way. But regardless, this empty ATM, it's called The Empty ATM or Empty ATM. It's a PBS documentary. It's a fact. It's a factual show.
Right.
What happened in Argentina. And that was before the Cyprus event. So the idea being that silver works very well because it's the money of last resort when you actually do get to a barter situation and you can only get $100 a week out of your ATM and your expenses are 3 times that. It's nice to have silver rings and silver jewelry and gold rings and gold jewelry, not to mention the gold and silver coins, but especially silver because the denominations are so much less that you can trade a dime for, a couple of loaves of bread or a loaf of bread or whatever. You're in a barter situation. So the point being that I think silver is more of a money of last resort than gold is, from the aspect that you could make a lot more simple transactions if you needed to. And to think that you don't need to, it did happen. Does it happen in North America? I don't know. What I do know is it happened in 2000 in Argentina. I think that's close enough to, my birth date. That it's a real event. So I don't know. Again, I'm droning on, but doggone it. I don't think if you're thinking that, this thing's under control, you better recheck your thinking. You better quit watching reality TV and, take some smelling salts and wake up.
Yeah. It's funny. Hey, one thing we didn't mention, and if you remember, it's really interesting. I published that little report on war nickels a couple of months back, and I was paying about $1.85 per nickel, and it was under spot. It was 8% below spot. Now I looked on eBay. Those nickels are selling for $1.93 each, and they're 50 cents above spot. So the point is, long-winded way of saying it, is that premiums have gone up in silver dramatically. And from what I hear from the dealers that I talk to, there's very little supply around of this stuff.
Well, I'm fairly well connected, and that's putting it in rather modest terms. I mean, I know most of the largest wholesalers on a first-name basis, and many of the retailers that are substantial. And one of the bigger retailers said he had the best week he's ever had about a week ago, selling physical silver. A lot of what you say is true. The bag market has gone from like $1 under melt value. In other words, you're buying it at less than melt to about $2 over melt right now. So the premium on bags is extremely high. You've got a shortage of almost anything in the retail market. Not as bad as it was in the financial crisis of 2008, but it's moving that direction. It's hard to get silver rounds. It's hard to get silver bars. It's hard to get silver bags. And the mints are backlogged. The Canadian mint 3 to 4 weeks out. The U.S. mint 3 to 4 weeks out. Obviously, physical demand for silver is anything but weak, and yet you see, $1.81 down in one trading session, with probably more to come. With the paper markets being set up the way that they are, you're going to see some calls, and it's possible that we get down to 25 and whatever during the day Monday, and all the margin calls are enacted, and there's some good buying in there, and it pops up above 26. I mean, that is possible. It's possible it doesn't go below 26. I don't see that. I mean, I've seen watch these markets for too long.
Yeah.
So you just got to kind of wait and see. But I did go through what has happened in the past on these really dramatic moves down and what takes place. And I don't want to give it away because, I spend way too much time and effort doing,
Sure.
stuff and pay me. But I'll just put it in a rather vague, in a general way. Don't panic. Please don't panic. No need to.
Yeah, that's always a mistake. And I'm looking at Nenner, Charles Nenner, who I mentioned to you, a well-known cycle guy. He said his downside target for silver, for gold, was 1539, and he thought it would be later in the month. So he said that when it hit 39, that there would still be a later low, better trading low. And his low price target of silver was 2460, and he published this on April 5th. And he's primarily looking at the paper markets because it's so interesting that, the price went down, but the premiums have gone up and more than compensated for the prices. You're still going to pay, close to $30 an ounce if you're buying silver. Certainly in rounds and in the junk, going to be close to $30 an ounce.
Well, we've done a study for the May issue of the Morgan Report, and what we're looking at is the true costs. Most people don't have a clue unless they're in the sector and very involved in the sector. A lot of people that are subscribers that really don't know a cash cost is basically meaningless. There's a lot of companies that run around saying our cash costs of silver are $3 an ounce or something. Oh my goodness, cash costs are $3. Cash costs are meaningless, and yet, unfortunately, and I can't say meaningless. To me, they're meaningless. Mm-hmm. To the accounting people, they are significant because that's the way that they're required to account. But they don't mean anything as far as profit is concerned. What means everything is, do you make a profit or a loss? So if your cash cost is $3 and you're losing money, then obviously something that the cash cost doesn't mean anything. So the true costs are what we looked at on, I forget how many because it's my team, it's not just me anymore. I have a team of people that do research constantly on all kinds of topics, but primarily around the metals markets. And so we found that the true honest-to-God cost of silver in a lot of these situations is around $20 an ounce. So certainly, it's significantly higher than a lot of people believe. A lot of people think, they're getting silver for $8 or $9 out of the ground. Well, maybe on their reported cash cost, that's what they're getting. But their honest-to-God true cost of everything it takes to run the business is significantly higher in a lot of cases.
Yeah, no doubt. And with energy costs the way that they are, because mining is such an energy-intensive business, because you need the energy to get it out of the ground, and then you need the energy to refine it. And every step of the way, very energy-intensive. So with these energy prices, their costs have certainly gone higher. Every miner's cost is higher than it was just a couple of years ago, before oil hit 140 a barrel for a short period of time. And probably those costs are going to go up in the foreseeable future, because it looks like oil's on a pretty strong footing, and it's on a kind of gradual upward trend, barring any geopolitical whatever that takes place. And yeah, it's so interesting, David. You'd think after Cyprus, where you see banks, they're just telling you, oh, that money that you had here, well, it's ours now, or it's no longer yours. You lost it. And you see Japan hyperinflating, and you see the U.S. hyperinflating, and you see so many things occurring, and yet something like this can occur in spite of all the fundamentals, because in the short run, you really have no idea what's going to happen from day to day.
Yeah, well said.
I mean, hey, there are people who are good at it. I ain't one of them. I just try to tune out the noise and not pay attention to it, because, like I said, there's so much going on in the world, and none of it's good for fiat currency. It's that simple. And if it's not now, it's going to be later. But it's going to happen, where there's going to be some type of realignment, global realignment of currencies, and some reversion back to the only thing that keeps a currency alive for more than 40 years, and that's metal backing. It can't work any other way, can it?
Oh, in theory it can, but from what we have of recorded history, no. So, I mean, there's always some proponent of, like the Bitcoin thing, and I'm not anti-Bitcoin. I just think basically the argument boils down to two things. There's specie money and there's non. Mm-hmm. The one side of the argument is, well, money can be anything we say. It's a legal act, and therefore money can be anything. Well, if money can be anything, it could be silver. Oh, what a concept.
Yeah.
Oh, I thought silver wasn't money. But if money can be anything, and you use that logic, and you have to adhere to your principle, you have to adhere to your foundational statement or argument. If money can be anything, then it could be silver. That's that argument. So it boils down to, I'm off track, but some of these arguments just really irk me, because people don't have any foundation in logic whatsoever.
And no historical perspective.
It's either specie money or it isn't. So it's some fiction or something that somebody made up that forces you to use it, or the free market says it's something in your hand that can be barterable, that has value in and of itself. And if you go back and really study monetary history, it's really a trimetallic standard. It's copper, silver, and gold. And there's reasons for that. Copper is less valuable than silver. Silver is less valuable than gold. And you can make change pretty much with those three mintages anywhere, anytime, any place, for anything. But we've lost that simplicity. And now you've got, all this electronic digity running around. And is it a means of settlement and all that? And the answer is yes. Is it a unit of account? And the answer is yes. Does it function as money, quote unquote? Well, in most cases, it functions as money, except for the most important part of money. The most important part, and that's a store of value. That what you have today, those coppers, those silvers, those golds, those units, that amount of weight will buy you 10 years, 20 years, 30 years, 50 years, 100 years, 200 years from today, what it buys you today. And certainly the price fluctuates. I will not argue that, but what people need to understand is that the weight of an ounce of gold, of an ounce of silver, an ounce of copper for that matter, does not vary at all. What varies is the amount of currency that has been produced vis-a-vis the amount of new copper, new silver, and new gold that's been produced. That's what fluctuates. Mm-hmm. And as you said, Kerry, there's little doubt that this isn't a great big psyops operation. It's a psychological warfare. It's to keep as many people from getting into the market as they possibly can. If there's a cyber attack on the financial markets in another week, month, year, 2 years, I don't know if there will be. But if there were to be something like that caused these financial markets to shut down on a temporary basis, it could be, would be, but could be a little too late. So my suggestion is, don't stake your whole life around the metals markets. I chose to make it my life. I made that choice. But for most people, just buy a little bit. Get some that makes you comfortable. 10% is probably enough for most people, 20 if you're really worried, and go about your daily life. I mean, you don't have to make it complicated. You can make it very, very simple. And I think this is an opportunity.
Yeah, I couldn't agree more with that, David. You know, you really kind of hit the nail on the head. And the fact is that when you get away from gold and silver, the problem is that it allows the government to take on, at first, limited amounts of debt and eventually unlimited amounts of debt. And once they get into that increasing amounts of debt where debt never goes down, eventually you're going to have the exact situation that we're in now. And that external discipline where the gold standard or a metallic standard is really adhered to forces the government to not overpromise and overdeliver in pursuit of additional votes and attempt to maintain power. And, you know, it's been said so many times, I'm not even going to bother to quote de Tocqueville, but it's obvious that that's the situation we're in now. And we're at the end of this thing, and they're not going to go quietly into the night. They're going to fight this every inch of the way until finally the discipline is imposed upon them, the elites. And that's why you need to get the gold and silver now. Whatever you're comfortable with, have some. It's an insurance policy on the inevitable. So on that note, David, silver-investor.com, and you're sending out your report kind of as we speak, huh?
Well, the update, yeah, there's several levels of service. There's three. There's the one that is just a basic report, which is monthly for basically buy and hold investors. Then there's one that entails that plus what I call Basic Plus, which is the basic letter, and my updates on an as-required basis. It's not every week or every month or every 2 weeks. It's just whenever the market's dictated. I've done several this month because the markets have been so crazy. So I sit down and do a video, and then I send that out, and it's on our server, so it plays really quickly. And it's, I don't have that many subscribers, but it's my trading or my, thoughts. So it's a good way to update everybody. So after this big smashing of Friday's event, I, was required really to tell everybody what's going on, how bad it could get from here, and where it will stop and why it'll stop where it will, and on and on and on it goes. So, yeah, I just got done a little burnt out on it in a way. I mean, I've looked at it from probably every angle I know, and I've been at this thing for, 4 decades, but nonetheless, always learning more, always staying positive. And you're right. Unfortunately, you're right. I mean, I'd love to say, the bankers have it well in hand. And, well, I don't know if I'd love to say that. Let me restate that. I'd like to believe that the financial system was on an ethical basis and we could trust the financial elites to do the right thing. But we know that's a complete fabrication.
That's fantasy land.
But the truth, we need to take action in our own hands. And the best way to do that is to, be real, get real, and buy real.
Yeah, and that's it. Be real. And again, we're going to see you in Dallas on June 28th and 29th at the Liberty Mastermind Symposium. We're really looking forward to it because I think we're going to get a lot of people who aren't just the converted, people who already know all this. I'm hoping that we can really educate a lot of you. People, if you've got doubts and you feel uneasy about the system, then you really need to be there. So, David, we'll talk to you again soon. You be well. Thanks for taking time out from a leisurely Saturday to update us.
You're most welcome. Thank you, Kerry.